Hello, it is the 6th of May 2011, the 1 year anniversary of the flash crash. And, well, I guess the same week had another flash crash. The only difference is the other one, the stock market, was a matter of a few hours, and silver was a few hours many times for the entire week, at least up until the Thursday session. We've seen the price go from 50, I think, down to 34. So 16 would be that of about 30% in less than a week. I would consider that to be a crash. Now, looking at this on the quarterly chart, this is the first red candle since the bottom, and it's still not even guaranteed to be a red candle because there's still almost 2 months to go in the quarter. It does show a lot of volatility, big time, lot of volatility. And we look at the technicals, we look at the fundamentals. Is it possible we have more down moves or maybe a major move higher? Maybe a down move here and then close the candle up here. It's definitely possible. We've already seen that if we can have a 30% down move in a week, then we could very easily have about a 40% up move in a week. Now I say 40% because 30% up is not the same as 30% down. That roughly 30% down is close to 40 up. And we see these moves, it's most likely stuff behind the scenes. Now, there's a video from Dr. Doom, Realist News. It's on the blog. It's also on the favorites. I highly recommend this video. It's spectacular. Words I could not say better myself. And it's talking about powers that be, the biggest bankers, the people in control of the financial system, of bringing the price down. Now, would they have the availability to do it? Well, they're the ones with the fiat money doing it within the paper market. I'd have to say yes. And they don't want to buy at the higher prices, or even regular prices, or not even cheap prices like fire sale prices. Now, where's fire sale? I'm thinking fire sales in at least down towards here. And within the charts, that's the next support level based on previous resistance, and really, for that matter, even Fibonacci. And that could be pretty big and still keep the quarterly extremely long-term trend really, really bullish. That I've been talking about a major trend line that's been killing us on the shorter term chart. Well, the same thing is here on the super long-term chart. Now, generally, long-term beats short-term, but short-term works first. And like there's a lot of down movements left. It does make sense in testing newer areas. I was stating yesterday that to buy at 39, which I did. In fact, it was cheaper because I bought hours after I posted the video and I got a much cheaper price. But I stated to wait for 31 or to buy on strength, whichever comes first. Now, the 33 was the top area. I've adjusted it lower to 31. And if we start to roll over, or we start to turn over, I'm saying roll over for change of direction, actually. If you start to turn over and move higher, then I'm going to be confused. Because it's either that fast move or a failed move, and I would guess failed move. However, you're never entirely sure when you're in these manipulated markets like this. Now, what are the reasons why you're into silver? If you're into silver because you want to time the market or you want to be a swing trader, then there's not much more I'm going to say other than good luck, because I would rather play this for protecting myself against fiat currency. A lot of people are getting hit hard with margins, and that's a very good strategy to get the prices lower, is to hit a lot of them with margins, as well as put out the bid and ask prices, or if anyone's got prices to sell their stuff, the lower prices, they'll just take them in. Or how's that work? If they'll add the ask price with lower numbers, the best one. So say, for example, the price is 36.10. There's somebody with an offer for that. That's what you'd sell it for. They'll stick in one for 36.09. And then when that goes, they stick it in for 36.08. And at the same time, whoever's got the lower bids, they'll just scoop them up, and those prices keep going lower. There's so many different strategies, and I don't know exactly for sure what. But if you've been buying up here, you're like, man, I wanted to get in and I got the top. Well, that happens. I remember buying up in here too, up in the March 2008 highs, roughly around 20, 21 an ounce. That was the first purchase I bought. It was only 2 coins. then again down here around 19 or so. It looked like it was breaking out, and well, it didn't. However, it's doing well because I'm well in the money on this. If you look at in that example, and I was able to get in another couple purchases before the market bottomed. If you're in the same situation, you'll enter a dollar cost average of going lower. If you've been buying like me or so many other people on different occasions, what you've been doing is seeing your dollar cost average go higher. And by buying lower, it means that it won't go up as high. You'll buy at your dollar cost average, it will stay the same. Something in that area. Now, if you've already bought what you want, you're just waiting, and this is really frustrating you. There's a part of me too that is like, man, that kind of sucks. But there's a bigger part of me that really excites me even more because I'm expecting this kind of stuff to happen. I know where it's basically going to go towards, so I'll just play it that way and just let the message of the market tell me where I'm going to go. I'm not going to buy at 33. Rather, I'm going to wait for 31 because there's no support at 39. Only for about a few hours, like 4 or 5 hours. When I talk about a level that big, I don't talk about 5 hours. I talk about at least a decent percentage or a decent amount of time. That wasn't it. A few hours wasn't enough time. A few days would be, or even a couple days would be okay. Just correcting sideways. But no, and I said, watch out if this happens. This could continue to move in this direction. If they got the power to do this, then hey, why not, I guess. I look at different situations and I say to myself, well, what's really going on? Last May we had the flash crash. Do we really know what happens? We can speculate, we can guess, and maybe we have some good ideas. Same thing with this one. What happened? What was going on? Same thing. Speculate, calculated guesses. But we were told fat finger typo and Osama dying. Now, whichever one makes the most logical sense to you is the one that I would be personally using. Now, we also had the webbot stating $5 days, and I mean, they happen both up and down. And I was stating about I think after the first day, the markets were going wild, that of these 10% days, or after the first 10% day, I was stating, out of 20, I would expect around 70% of them, or 14 out of 20, to be that of down days when it's 10%. There will definitely be some up days in that level. That's how the volatility works in both directions. But normally, in the bear markets or the down moves, whether it's a bull market or a bear market, are really frequent to the downside. In fact, if you look at bear markets where markets get crushed, it's the same thing. There's many 10% up days. After the market crashed in 2008, Dow went from 7,800 on a Friday morning, and then the next trading morning, it was up 2,000 points or so, 1,600 total after that day, a trading day, and the open, basically. I think it was the Tuesday after the Friday. So it went from Friday afternoon at Dow, like 8,000. And then Monday it had a 1,000-point day. Tuesday it gapped up to like 9,800. And, well, it then went crashing again. Meaning a 2,000-point day or over 20% in a bear market. Those things are very natural to occur within this time frame. We do have this uptrend, and we do have this uptrend still intact. We have yet to have had a red candle, and if I've already said this once, forgive me because this is the third or fourth try I'm trying to do this. So I'm getting a little exhausted. This will be the last take. However, this is the first time we've seen a red candle, and we still may not even see a red candle because we're only a little over 1/3 through this candle. This is a quarter chart. That is April, May, and June. We have most of May and all of June left. Now, at this stake, I've seen oftentimes where on like a 2-minute time frame where it does come down after this and then it keeps going higher. That's not uncommon, but at the same point, when markets correct, they can do it violently, especially when the fundamentals allow the market to be manipulated in the manner, and they can pretty much do anything. And I say pretty much because the lower they go, the bigger the disconnect will be. And I've been saying this for months now. right now the disconnect is it's here, it's stronger than it was in here, but would obviously be more stronger down towards here. And if they got insane enough to go here or here, it wouldn't be naturally possible basically. So that will be about it. If you're getting shaken out, again, I don't know what to tell you. If you're losing on margin, uh, borrowing money kind of sucks, because the reason why I like silver is because the debt-based system kind of sucks, and the financial instruments that this world works within kind of sucks, in my opinion. And well, that's part of that type of process. So there's not much more I can say, because I've been talking a lot about the volatility that can occur within these kinds of environments. All right, so I'd like to thank you all for watching this, and remember, check out that video from Dr. Doom. It's on the favorites, it's on the blog. It's about 20 minutes long. He's got an awesome channel, great information, and I'll talk to you guys and gals later on. Take care.